This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Wrestling with the bear, oil prices fall more than 20% from their most recent high, taking gas prices and oil stocks down with them.
Buying spree. Dow component Verizon is spending billions on a GPS tracking company, and investors want to know why.
Disrupting retirement, what some startups are doing to shake up the savings of millions of Americans. Those stories and more tonight on Nightly Business Report for Monday, August 1st.
Good evening, everyone, and welcome. The bear is back. Not for stocks, but for oil prices. Domestic crude broke below $40 a barrel midday to settle down more than 20% from its most recent high in June. That technically qualifies as a bear market. Now, a number of factors are contributing to the slide. On the supply side, there are early signs that production is increasing in the U.S., just as output from OPEC and elsewhere is rising. And demand isn't increasing enough to mop up the excess. As a result, crude settled down nearly 4% today to about $40 a barrel. Hello, Mr. Bear. And as the oil price tumbles, gas prices follow. Jackie DeAngelis has a look at what drivers can expect when they go to fill up.
Good news for consumers. Gas prices are falling sharply at a time that they're expected to rise. According to AAA, the national average for a gallon of regular gas is $2.13. It was $2.66 last year, and that's the average. Some cities are well under $2, which is unusual for the height of the summer. Causing the decline, a glut in relatively cheap oil. That led to a refining boom, and that created a gasoline glut. Seasonally, summer is when Americans hit the road, so it's one time of year that we can expect an uptick in demand. That demand was robust, but not enough to make a dent in inventories.
We started out the driving season with, needless to say, an abundance of crude oil. That crude oil had to be used. It was refined into gasoline. Refineries were running about 92 to 95%, which is about 4 to 5 percentage points higher than previous years.
So what happens after the summer? When demand drops off and we see crude and gas prices decline every year, those drops will be even more pronounced.
As the price of crude oil slides, you're going to see a slide in gasoline prices. Number one, we switch over to the October contract, which is the winter grade, and we lose 10 cents a gallon just by switching it over there. Demand usually drops in the late third, fourth quarter, and first quarters of every year. So I would expect gas prices to touch maybe the 150 area by Christmas or even New Year's.
Meantime, Barclays out with a negative note this morning saying the drain is clogged and also pointing to oversupply issues and demand issues internationally come this fall. The Saudis continue to pump oil to compete with Iran, so there's little relief in sight. The only caveat that could shift this story from fundamentals and send prices higher is the dollar, which typically moves on Fed expectations. If the market feels the Fed won't hike, that means a weaker dollar and higher crude prices. But for now, consumers are relishing in less pain at the pump. For Nightly Business Report, I'm Jackie DeAngelis.
Energy shares were among the biggest decliners today, thanks to those falling oil prices that offset gains in healthcare and technology stocks. And stocks continued to move within a very narrow trading range on this first day of trading in August. According to new research, in fact, the S&P 500 has spent the last 2 weeks in one of its narrowest trading ranges since the early 1980s. The Dow Jones Industrial Average fell 27 points to 18,404. The Nasdaq climbed 22. The S&P 500 fell nearly 3, but did briefly hit a fresh all-time intraday high.
When you think of Verizon, you probably think of a giant phone company, wireless, wireline with some cable systems thrown in. So you may have been scratching your head when you heard it was spending about $2.5 billion on a GPS vehicle tracking company called FleetMatics. The deal sent shares of FleetMatics up more than 38%. Meanwhile, Verizon shares fell. But as Morgan Brennan explains, there's a strategic reason why Verizon made the big acquisition.
Verizon's buying spree continues. The top U.S. wireless carrier buying FleetMatics. The Dublin-based company provides fleet management services, developing software that shows vehicle locations, fuel usage, mileage, and driver hours. News of the deal comes right on the heels of Verizon's purchase of another fleet management firm, Telligis, for an undisclosed sum last Friday. Analysts say it's all part of a plan to expand beyond smartphones, a market that's maturing amid fierce competition between carriers.
Verizon's primary interest in FleetMatics is largely to bolster their position in the Internet of Things arena. Right now, Verizon is in a bit of a transition phase, and it's looking for new opportunities to grow its overall revenue pie as some of these new opportunities emerge.
And the Internet of Things does provide an opportunity. Revenue in Verizon's Internet of Things division grew 25% last quarter to $205 million. A modest sum compared to $30 billion overall, but representing one of its fastest growing segments. FleetMatics will provide more services catering to small business, enterprise, and long-haul trucking. But this is only the latest in a buying spree that's over the past 18 months. Also included AOL for $4.4 billion and just recently, Yahoo for $4.8 billion.
Over the longer term, think of Verizon as more looking to diversify its revenue streams by connecting more devices and then being a part of the different types of data that traverse its network.
All of these purchases, from tech to media to trucking services, enable Verizon to not only provide the wireless network, but the software to run on it and the content to attract and keep users and advertisers as well. For Nightly Business Report, I'm Morgan Brennan.
In other deal news, Tesla Motors and SolarCity have agreed to combine in a deal valued at a little bit more than $2.5 billion. The merger will put electric vehicles, rooftop solar systems, and energy storage batteries under the same roof. Despite neither company turning a profit, Tesla's CEO Elon Musk said the time is right to do the tie-up.
In order for the right scenario to transpire in 3 years, we need to take the action now. You can't take the action in 3 years and then have it instantly be the right move. It takes time to get there.
Shares of both Tesla and SolarCity fell in today's trading.
Yet another deal to tell you about. This one is cross-border. Didi, the dominant ride-hailing service in China, will acquire rival Uber's operations in that country. The deal ends a fierce battle between the two companies in the market that was one of Uber's largest by the total number of rides. Eunice Yoon reports tonight from Beijing.
Didi is acquiring all of Uber's assets in China. That includes the operations, the brand, as well as the data. Investors in Uber will get a 20% stake in the combined company, which will be valued at $35 billion. In addition, Didi will invest $1 billion in Uber. The deal will finally end a fierce price war between the two companies in China. Both companies have been spending billions in subsidies to attract drivers and passengers. Uber has been losing $1 billion a year here. Uber CEO posted his reason for the decision on Facebook, saying serving China's cities is only possible with profitability. At the same time, it's been fighting an uphill battle. Didi raised $7 billion in part from Apple. It's also backed by China's sovereign wealth fund. And Didi said that it now is the only company with investors from China's three major tech titans, Alibaba, Tencent, and now Baidu. Uber's case is also pointing to wider concern in the tech community that the business environment for foreign companies is just getting tougher. For Nightly Business Report, I'm Eunice Yoon in Beijing.
Activity in China's manufacturing sector shrank in July. According to an official survey, orders cooled, demand was weak, and flooding in parts of the country disrupted business. The report is adding to recent concerns that China's economy will slow in the coming months.
The factory sector here in the U.S. grew at a modestly slower rate in July, but is still expanding at a pace that can support the broader economy. The Institute for Supply Management saw its index drop slightly to just under a one-year high. The index has been positive for 5 straight months. Separately, U.S. construction spending fell for a 3rd straight month, with spending on non-residential building dropping by the largest amount in 6 months.
Two Federal Reserve officials suggest that the financial markets are too complacent about a September rate hike. Speaking in China, Dallas Fed President Rob Kaplan said a rate hike next month is, quote, very much on the table. Meantime, the president of the New York Fed, Bill Dudley, said he could definitely see the central bank raising interest rates at some point before the election. Both officials said economic data between now and the next meeting will be critical to any decision.
The CEO of the biggest U.S. bank by assets sounded optimistic on the U.S. economy, saying it has the potential to grow a lot faster than it is now. Jamie Dimon made the comments during an interview today with Wilfred Frost in Huntington Beach, California.
The chairman and CEO of J.P. Morgan, Jamie Dimon, said he was not concerned about oil prices falling below $40 today. In fact, he was upbeat about the outlook of the U.S. economy and in a message to the main presidential candidates outlined some of the actions he thinks the next president should be taking.
What I would worry about more is that if the next president, whoever it is, focuses on the right things, I think we're going at 4%. Okay, and those right things are proper immigration reform, proper infrastructure spending, roads, bridges, tunnels, hospitals, schools, airports would be great for the United States. You know, we need corporate tax reform. I would also expand things like the earned income tax credit to help the lower paid.
Despite that positive outlook, he did outline some concerns about bond market valuations.
I'm not a buyer of 10-year bonds. Okay, I would be a little worried about drastic actions in the 10-year bond. The more important thing, and the Fed talks about it, is if we have proper growth in the United States, that will start to normalize interest rates. So think of the short end. And, 25 basis points doesn't matter that much, but the fact is, if we start to normalize, I personally think it's a good thing.
Away from America following the recent Brexit vote, when asked whether he could envisage a future breakdown of the Eurozone, Mr. Dimon said it could be one of the fat tail outcomes of Brexit. It may take more than 5 years, but it may very well happen. For Nightly Business Report, I'm Wilfred Frost from Huntington Beach, California.
Meantime, the recent European bank stress tests are putting a renewed focus on the Italian banks, which some fear could be the next trouble spot for the global economy. Julia Chetterley reports from Rome.
The worst performing bank in the European bank stress tests, Monte dei Paschi, actually the best performing bank in trading today. Why? Well, I can tell you it wasn't to do with the stress tests. It was to do with that 11th hour €5 billion recapitalization plan that was announced, conditional on a whole chunk of their non-performing loans being moved off balance sheet and then financed by issuing bonds to the Italian government, to this Atlante fund here in Italy, and to shareholders. I can feel your eyebrows raising already, and it does raise a whole host of questions. Why will investors be willing to invest in these bonds when we've already seen over €8 billion invested to recapitalize Monte dei Paschi in the past? Also, the Atlante fund itself is a collection of cash from some of the biggest banks here in Italy. And does it make sense to dilute some of the strength of the stronger banks to offset and help the weaker ones? This remains an ongoing question, but for now at least, investors relieved, I think, that something is being done and a private sector solution, not a bail-in, for Monte dei Paschi Bank. UniCredit also in focus. There obviously wasn't a pass-fail mark for these stress tests, but 7% Tier 1 capital under the adverse scenario was really a benchmark. UniCredit coming just above there. Now, analysts at Credit Suisse had suggested that the bank could need between 4 and 9 billion euros. So once again, still some questions being asked of one of the two largest banks, UniCredit, here in Italy. And just to blur the picture a bit more, remember, UniCredit is one of those giving cash to the Atlante fund. It's very Italian. We're going to continue to watch this, but for now, a stronger performance on Monte dei Paschi in trading today, and a bit of a sigh of relief, I think, that something is being done to tackle issues in the banking sector before that critical vote on the constitutional referendum here in Italy that Prime Minister Matteo Renzi has signed his future on. We'll see. Back to you.
Still ahead, disrupting retirement. Millions of Americans don't have access to a 401k, but now some startups want to change that. Suzanne Wright, the co-founder of Autism Speaks, died on Friday after a 9-month battle with pancreatic cancer. She and her husband, Bob Wright, the former CEO of NBC Universal, started the organization more than 10 years ago after their grandson was diagnosed with the disorder. Autism Speaks has committed more than $570 million to research the causes, prevention of, and treatment of autism. Ms. Wright was 69.
To politics now, and the powerful and deep-pocketed Koch brothers, who over the weekend rejected pressure to back Donald Trump, the Republican presidential candidate. The rejection deprives Trump of a major source of funding. John Harwood joins us now from Washington. John, was this a surprise that they decided not to back Trump, and what are the implications?
I don't think it's a big surprise, Sue. Donald Trump does not share their free market views on trade, for example, on limited government, reforming entitlement programs. So they had signaled some distance from Trump before, but it is a rebuff that stings at this point in the campaign because Donald Trump and the Republican Party are trying very rapidly to raise money to catch up with Hillary Clinton. They're far behind. They're working it. They've made some progress, but they need more. And because Donald Trump has not indicated that he's willing to put the kind of resources into his campaign you need to compete with what Hillary Clinton's got.
From one billionaire, Mr. Koch, to another, the billionaire investor Warren Buffett campaigned with Hillary Clinton today in Omaha. Is that really impactful to her campaign?
I think it is a marginal development. Warren Buffett is famous among certain circles of people, certainly investors and the business community, not a household name to the average person. But anything that lends credibility to Hillary Clinton's argument that Donald Trump is too risky to entrust with control of the military and the economy helps her reach out to independent voters and some moderate Republicans.
You know, we were talking about how unreliable polls are during the conventions, but now that we're past those conventions, there are some new polls out. The latest two have Hillary Clinton leading slightly. Tell us more about that.
Well, as you said, Sue, we take them with a grain of salt. Nevertheless, it's a piece of data. You look at it and see if it holds up over time. CNN came out with a poll today which showed Hillary Clinton now 9 points ahead of Donald Trump. She was behind by 3 going into her convention. There was a CBS News poll that showed a 7-point edge for Hillary Clinton. I'll be waiting for others later in the week, including the NBC Wall Street Journal poll, which before both conventions showed that Hillary Clinton was ahead by 5 points. What's it going to be a week from now? We'll find out.
All right, John, thank you so much. As always, John Harwood in Washington.
New hope for a childhood spine disorder sends shares of 2 biotechs higher, and that is where we begin tonight's market focus. Biogen and Ionis Pharmaceuticals said their drug intended to treat infant spinal muscular atrophy met its main goal during clinical testing. Due to the drug's success, Biogen will now exercise its option to develop and commercialize the drug. It will halt the trial, begin treating patients in a subsequent study. Biogen, which paid Ionis about $75 million in a licensing fee, plans to seek regulatory approval for the drug by the end of the year. Shares of Biogen up 4% to 301.83, but look at the shares of Ionis up 30% to 38.01. Pfizer has inked a deal to buy the rest of Bamboo Therapeutics. Pfizer will pay $150 million to acquire the 78% of the gene therapy company it doesn't already own. Shares of Pfizer up 8% to 37.31. And GlaxoSmithKline and the life sciences division of Google's parent Alphabet will form a new company to develop bioelectronic medicines, which use miniature electronic devices to manage electrical impulses in the nervous system. The company said they will contribute more than $700 million to the joint venture over the next 7 years. Shares of Glaxo up 18 cents to 45.25. Alphabet up 8% to $800.94.
Cost cuts helped Diamond Offshore beat profit and revenue expectations in its latest quarter. But despite the better-than-expected earnings, shares of the drilling contractor fell after the company said there were, quote, next to zero contracts in place for rigs. Diamond Offshore fell more than 7.5% to $20.98. Credit card payments processor First Data posted higher than expected profit. The company said strong growth in its global financial solutions division and in Latin America helped to lift results. Revenue also rose. Shares surged 5% to $13.02. Analysts at Citigroup are bullish on Etsy. The bank placed a buy rating on the stock of the crafts marketplace and a target price of $14, saying consensus revenue estimates are far too conservative, especially on the company's seller services business. Shares rose nearly 18% to $11.86.
Well, if you work for a small company, there's a good chance you don't have a 401k, or if you do, you may pay a lot for it. Now, a bunch of startups are looking to change that by using technology to lower the cost. But can these firms deliver on their big promise? Sharon Epperson joins us now. Sharon, why are we seeing a rise in 401k plans for companies that heretofore haven't been able to offer them?
Yeah, Tyler, this is a huge untapped market. We're talking about among those companies with 100 or fewer employees, that's about 42 million people that are employed by these companies, about a third of the private sector workforce, and only 14% of these small businesses actually sponsor a retirement plan. So there's a great market out there for companies that want to offer retirement plans and so many workers that don't have access to plans that need it.
So who's entering the industry?
There are a lot of financial technology firms that are coming up that are entering the industry. For Us All is one of them. Honest Dollar, a lot of Silicon Valley startups. And then there's some that have been around for several years but are really in that small business space, like Employee Fiduciary or some of the other America's Best 401k. And then there are the fund companies that have been around for a long time, like Vanguard, that are also in this small business market. But it's those financial technology companies that are really being disruptive right now.
When you say financial technology, there's a phrase out there called robo-advisors.
Exactly.
Is that what lots of these are?
That's basically what they are. They're offering online services and able to offer investments at a lower cost because they're doing so much of this online. And so they're basically setting it up for you as a robo-advisor would with your regular retirement plan, but they're doing it for the small business.
For the employer.
And it certainly is lowering the prices overall for these 401k plans for small businesses. We've seen that. Brightscope has put out data about how much it's dropped, and it's gone down significantly over the last several years.
That's some of their promises, so it appears on the surface anyway that they are living up to their promises.
Well, it appears on the surface that they are, but you always have to look under the hood when it comes to retirement, and we always talk about this. I mean, you really need to look at what types of investments they're offering. Many of them are just offering index funds, some of which you may be able to get just on your own for still less money. And then you have to look at beyond the lower fees, what else are they providing? Is there financial education? Usually not that much unless it has a good communications arm to send out information, but you're really not talking to someone. And many people say that's what they want. They want to be able to talk to a real person. And is the person that you're calling in the call center at that online advisor, is that really someone who's licensed to give you the information you need?
Sharon, thank you very much.
Sure.
Interesting development, though.
Definitely.
Making it available to many more people. Sharon Epperson,
And so important, sure.
And still ahead, sequel slump. Why familiar Hollywood brands are failing to find audiences the second, third, and in some cases, fourth time around.
Here's a look at what to watch tomorrow. Automakers report their sales figures for July, historically one of the busiest sales months of the year. Two Dow components report earnings, Pfizer and Procter & Gamble. And Japan's prime minister is expected to detail his government's latest fiscal stimulus package. That, folks, is what to watch for Tuesday.
The big winner at the box office this weekend was the latest installment of the Jason Bourne series, but it didn't take in as much as the last Bourne release. And that plays right into an emerging Hollywood trend that shows sequels are slumping and having a hard time finding audiences. Julia Borston has our story.
Jason Bourne had the biggest global debut in the franchise, $110 million worldwide. But its $60 million U.S. debut was still $10 million less than the 2007 Bourne film, not even including inflation. Including Bourne, the summer has had 2 more wide-release sequels than all of last summer. And this year's performance is far worse. The U.S. summer box office is 26% lower than it was last year at this point.
There are a lot of sequels that do very, very well. It may just be a quality problem. If the movie doesn't resonate, if it's not a good movie, it may not be that people are biased against sequels. They may just be biased against bad movies.
Last quarter's sequels were particularly rough. FBR analyst Barton Crockett writing that the quarter will be remembered as a time when sequels, especially those not featuring superheroes, came up short. He's referring in part to Paramount's Ninja Turtles Out of the Shadows, whose opening weekend was just 54% of the 2014 reboot. Viacom, which owns Paramount, warning its results would be impacted by the film's underperformance, prompting analyst downgrades. Just this morning, theater owner AMC Entertainment reported an 11% decline in U.S. per-screen revenue, blaming a, quote, lackluster film slate, sending its shares plummeting. Other summer disappointments include Universal's Neighbors 2 and Disney's Alice Through the Looking Glass. And Fox's Ice Age Collision Course had the worst opening among the 5 films in the series. But sequels have also been the year's top 2 performing films, Disney's Finding Dory and Captain America: Civil War. The bar is higher than ever to pull people away from their couch and from Netflix.
Audiences have a lot of options today, more than ever before. And you got to keep people going back to that movie theater to get in that movie-going habit. The way you keep them there is with great movies, not just with sequels, but with all kinds of different great movies.
One movie that might have the draw this weekend isn't a sequel, Warner Brothers' Suicide Squad. For Nightly Business Report, I'm Julia Borston in Los Angeles.
And that does it for Nightly Business Report for tonight. I'm Sue Herrera. Thanks for watching.
And thanks from me as well. I'm Tyler Mathisen. Have a great evening, everybody, and we'll see you right back here tomorrow night.